All right, everyone. So thank you for staying with us today. The panel we're going to be having for the next 30 minutes is really focused around digital asset exposure through public funds. We have participation from some founders of directly publicly traded companies, as well as previous founders and operators of publicly traded companies, and investors as well. And we'll be focusing on how these public vehicles provide a unique view on asset class exposure to the digital asset class. I'm going to take a minute to just give a brief introduction of the backgrounds of each of the speakers. And then guys, I'd love to hand it off to you to kind of give an update on what your most recent ventures are and what you've been focusing on. So first and foremost, we're being joined by Andrew Kiguel. Andrew Kiguel currently sits as the Chief Executive Officer of Tokens.com. Formerly, Andrew sat at the head of Hut 8 Mining, which is one of the first and largest publicly traded blockchain companies in global mining operations. Prior to his career in blockchain, Andrew spent about 18 years at GMP Securities, where he played an integral role in the real estate and retail capital markets group, including most recently as a managing director of investment banking. He's been a key member of GMP's transition into the blockchain space as an investment banking group. And Andrew Kiguel has extensive experience in providing both investment banking services to numerous public and private entities. David Lucatch is the CEO, president, and chair at Liquid Avatar Technologies. David started his career during the emergence of desktop publishing in the mid-1980s and was a very early internet adopter. David spent more than 35 years inventing technology and business solutions in the international marketing arena and has over 20 years of that experience developing internet and mobile-based platforms and working on taking them to market. David's held senior management directorships at both public and private companies and technology firms. Throughout his career, David's been an active supporter of numerous organizations, has been recognized and awarded internationally for his fundraising activities and dedication to service and community support activities. Finally, we have Sheldon Inwentash, the chairman, CEO, and CIO at 3D Capital. Sheldon is a serial entrepreneur, chairman, and CEO of 3D Capital, which is a Toronto-based VC firm specializing in investments in the junior resource, AI, and most relevant to today, the blockchain sector. Mr. Inwentash has more than 30 years of investing experience and has been instrumental in raising $15 billion for his private portfolio of companies over the last 15 years. He co-founded Visible Genetics, the first commercial pharmagenetics company, in 1994, which he exited to Bayer. And through 2 decades leading Pine Tree Capital, Mr. Inwentash created significant shareholder value through early investments in Keystone Mining, Aurelian Resources, and Gold Eagle Mines, the latter of which was acquired by Gold Corp for $1.5 million, just to name a few. So, I'd love to hand it off to each of you, maybe starting with Andrew, to share some insights onto what you guys are focused on today, specifically with Tokens.com.
Yeah, thanks, Zach. So my background, as you said, is investment banking, and my interest level in blockchain was how do you create products that can be easily migrated to people that are used to trading in fiat via their wealth advisors. So I was one of the first to put together a Bitcoin fund, which was then sold to 3iQ, which people are familiar with, and financed, I think while I was at my last year, GMP financed close to $1 billion of equity into the blockchain space. And Hut 8 was really created at the time in 2017 as a way of providing access to investors to Bitcoin. Today, there's lots of ways to get access to Bitcoin. So we've just created a new company called Tokens.com, and Tokens.com is focused on proof of stake, which is very similar to what crypto miners do, but it's environmentally friendly. And so that's a company that is on the verge of going public in the next few weeks. And that's my primary focus right now.
Awesome. David, why don't you take it away?
Sure. Thanks, Zach. Pleasure to meet everyone. Liquid Avatar is in the space of digital identity. So we use blockchain to support a user's self-sovereign identity. And it's a really new field because for the last 25 to 30 years in the internet, people have really been anonymous, and digital identity has been this, elusive thing that we've all tried to figure out how we're going to prove who we are online. And we believe we've cracked the code on that. We work with the Trust Over IP Foundation. And recently, we've also launched Oasis Digital Studios, which focuses on NFTs. And that is together with Imagine AR, another public company, which Sheldon is also an investor in. And we focus on experiential and collectible NFTs. And it's really important to Liquid Avatar because we're combining augmented reality experiences that will be available through Liquid Avatar with the NFTs. So we're really excited about the prospects. And today we announced that we're doing an NFT with exclusive John Lennon photographs.
Wow. Sheldon? Sheldon, you're on mute.
There, how's that?
That's better.
Okay. Yeah, thanks for having me. Following David, who we actually are an investor in his firm, as well as other companies that we're working on strategic partnerships with David's firm. 3D Capital is sort of more of a generalist in this space. We're invested from the miner side right through to, I guess, what would be the most significant, I think, development in the blockchain space, other than for the applications that it is in the whole NFT arena, which is opening up, just, I won't say a Pandora's box, but a rethinking of a lot of things. And even though at 3D we're invested in a cross section of blockchain companies, I came to it as a CPA, recognizing I'm not practicing CPA, that the smart contract was going to eliminate the function of the audit and many other things, that it's just decentralized world is where we're heading, and blockchain in terms of the big picture was it. We're constantly now investing in the space. A project that we've been involved in with 2017, had a brainstorm about 8 months ago and have turned the whole emoji market into your own identity. And it's a company called YAT, YAT, and it's absolutely blown up virally in terms of people buying their own combinations of YATs that really will form as their identity. They did a deal with Visa that's now going to change, codes from phone numbers to YATs, and which is sort of like a visual world, as much as the numeric world that we're sort of used to. So it's a very exciting time, and we're just happy to be in the space, which is really, sort of growing within the profile of our portfolio of companies inside 3D.
Awesome. Thank you, Sheldon. So David, as Sheldon mentioned, YAT, I'd be pretty interested in hearing your take on, how digital identity and digital avatars are kind of shaping the future, as it's obviously something that your company is very prominent in as well.
Yeah, thanks, Zach. Digital identity really starts at the heart of who am I, and how do I prove who I am? So it's actually a very challenging question. When we walk into let's say a store or a liquor store, someone recognizes our face and then recognizes our driver's license, and from those two pieces allows us to pass and buy liquor. That is very challenging online, and so we're using protocols, the W3C protocols that have been set to create a series of challenges that will prove that someone is who they say they are. We combine traditional KYC, know your customer, and anti-money laundering, and we allow that to be visually represented by an avatar. So whether it down the road is a YAT or our avatar or something else, users will be able to connect the fundamental elements of their digital identity using blockchain technology to the entire internet ecosphere.
Awesome. And it's certainly great, to hear how you're doing that. I think it's, a really important part of the digitization. Mm-hmm. So Sheldon, you also, mentioned something which had to do with your transition into blockchain and understanding decentralized world is the future. I think amongst all of you here on the panel, you all had traditional, strong careers in legacy financial markets or technology markets. Shifting into blockchain, especially as early adopters and investors, can by some be considered as risky for a lot of people in your shoes. I'm really curious to understand, some of the insights into what sparked your initial interest into the blockchain industry, and what's kept you there over time. Maybe you start with Sheldon.
Yeah, I guess my wake-up call was around 2017. I thought I was late to understanding, people call it the crypto world. I don't really like to use the word. I think it's all about basically smart contracts on the blockchain, creating applications that are useful to the world. And everybody had the view that, it was all about Bitcoin. And then obviously Ethereum, which had exploded at the time, which allowed people to build upon, which was, I think, a relevant stepping stone. So the more I dug into it, and I felt, I knew nothing, even though I was involved in some panels in Asia on the subject, sort of as a VC's look into this world, which hasn't changed, is I believe that, the whole concept of decentralization and the use of blockchain in the everyday world. I'm an art collector and I deal with a company, and they called me yesterday and they want to put all my art on the blockchain. And I'm totally a believer in what the value add is for art in terms of provenance, which is the most important thing when you sell a piece of work or buy a piece of work. So it all, to me, fueled the real world applications, whether you're dealing with supply chain and business, not just the ultimate, token, if you will, which obviously has its value and is a huge part of the digital asset class, and is something that we're extensively invested in. But the fundamental to me more relates about how business is going to be done, accounted for. It's a paradigm shift, and I've just felt stronger since my education began in 2017.
Thanks, David.
Well, thanks, Zach. I started in the internet when the internet didn't even have e-commerce, and I was very fortunate in 1997 to work. My team actually helped Canadians be able to put their credit cards online, and we developed some of that infrastructure to do that. I mean, before that, you couldn't even type in your credit card. So that solution was sort of the first impetus of proving who I am in a very small way. And when I came to the blockchain again, around when Sheldon did in late 2016, early 2017, my goal was to look at liquidity and compliance. And so we really focused on how we can shape the way that people can prove who they are. So from there, it really was for us all about ensuring that as time goes on, whether it's education, government services, information services, banking, anything in the realm that requires us to do business online, either as individuals or corporations, that were secure, and that the methodology was as simple, using blockchain, was as simple as going in and swiping your card, creating that type of ecosystem using blockchain technology to create transactions with digital identity.
Andrew? And I think specifically, Andrew, with your motivation on getting into the space, you were, again, one of the first pioneers for looking at it through, a public market lens. So curious to understand the story behind your initial motivation with HUD 8 and public markets.
Yeah, so look, for any technology to become effective, it needs to not necessarily solve a problem, but improve upon something that's being done. And working in I was an investment banker for 2 decades. Back in those days, what are the flaws with trading? The markets are open 9:30 to 4 o'clock. Okay, well, people like to trade outside hours. You're at the whims of whatever the regulatory issues are with that company. We saw what Robinhood did earlier this year when they blocked the trading, not just in GameStop, but in a whole bunch of other things. So there's that lack of control because it is centralized. In the traditional trading sense, it used to be 3 days to settle a trade.
Mm.
And today they moved it down to 2, but there's so much paperwork that happens behind the scenes. It's a highly inefficient system. Let's talk about banking. And again, these are all things I saw. I'm originally from Chile, and when I would look to send money to people and transact with relatives in Chile, I'd have to go to the bank and rely on the SWIFT system, which was paperwork to send money. They would charge me 5% here, 2% there, exchange rates, and then the money disappears into the ether for 5 days and you don't know where it is or when it's going to land. It's all highly inefficient. And so for me, as a guy that worked in finance for 2 decades, I'm like, there's better ways to do this. I don't need to wait 5 or 6 days to send money to somebody internationally. I can use Bitcoin or stablecoin or some other form of currency, and it's there within 20 minutes, and it's done at a fraction of the cost. Of course, the banks hate this because, international remittance fees are over $100 billion. And so this is a positive disruptor to that space. You look at things like trading. Well, you can go to Uniswap. Now you can't quite trade things like, Apple or Tesla, but why can't, stock values are moving even when the stock market is closed, right? Like over the weekend, if there's an announcement or things happen, values are still moving. You're just prohibited from trading those based on the stock market rules and those settlement dates. So for me, what got me involved in this is when you look at the whole sphere of where we were versus what can be done and what can be achieved through blockchain technology, it's pretty clear. And I would say that in 3-4 years, you're going to see markets that are open 24 hours a day, 7 days a week to be able to trade not just things, different tokens, but traditional stocks. Like if I want to transact with you and trade Tesla, we'll be able to do that and settle in real time.
Awesome. And I tend to agree. And I think that, where we're going, there's still baby steps to get there and bridging the gap and providing comfort through vehicles that make, industry participants and new kind of capital and institutions coming in comfortable through a public market lens is really important, as a lot of the benefits you spoke on, are not necessarily there today with public markets, but getting the exposure, ushering in capital through public market vehicles is really the first step. So I
totally. And one of the things that's interesting, and I always say that when you can invest, like in the early days of the internet, you couldn't really invest in the internet. You can invest in companies that leverage the internet, the applications of the internet, and then you had to sort of choose who are the winners and the losers going to be. Within the cryptocurrency space today, and specifically where tokens is focused, is all these layer 1 protocols that are really like the Lego for building things that enable things like NFTs and DeFi, borrowing, lending, all these things. You can actually invest in the plumbing or almost the AWS. Like, we don't care if it's going to be Netflix, Amazon Prime, or YouTube, or FaceTime, or whatever that wins the race. You can actually invest in the infrastructure, the plumbing that builds this stuff. And that's something that has never been, to my knowledge, that has been available to investors before. And so by creating these public vehicles like HUD 8 and tokens, it allows that traditional fiat investor who doesn't want to understand how to, secure tokens and hot wallets and cold wallets. Hey, call up your broker and here's a chance for me to get exposure to that.
Definitely. And I think that you make a great point. And even the comparison to the internet, aside from maybe, David here on the panel and a handful of participants in the audience, very few people even today. And I ask this to people, I'm like, how often do you use the internet? And they'll say, 10 times per day. Great. Can you describe to me the protocols and infrastructure that, govern and underlie the internet? And they have difficulty in understanding that. And I think there's a technical learning curve to adoption in the early stages of the digital asset industry today, because there's a technical component to understanding how these protocols and infrastructure work. But to your point, there are benefits and advantages in people getting the education, and having an ability to invest kind of encourages that deeper dive into understanding how these systems truly work. And once they start to understand, a lot of, us and again, I'm sure participants today, I'm sure have dove down the proverbial rabbit hole with, these complex concepts to really understand the benefits on a one-to-one versus, the systems we're so used to using. And not just used to using, but kind of blindly use because we never had the need to look at things differently. So it's interesting. I have another question for the group, which is, what do you guys think are the biggest risk barriers to entry into public markets that you anticipate really impacting new companies coming to market? Specifically with respect to Canada, as I know that's where we're sitting today, but if you have insights into global stock markets, I'd welcome that as well.
I'm happy to kick off the conversation. Canada has a few unique advantages, which is why there are so many, not just crypto companies listed in Canada, but cannabis companies. And that is this reverse takeover mechanism and the shell mechanism that is unique, which allows companies to come and get listed in Canada and get approved by an exchange instead of the securities regulator. So it's a much more streamlined process that allows people in what I would say areas that are demanded by the public, but not yet ready for sort of that high level of regulation to get listed and raise capital. But I think that's why you see a lot of companies here. And the risk is that the regulations have increased. As a guy that ran a public company, it's incredibly hard to get an audit completed in the crypto space. And in fact, there were deliberate moves made by the head of the audit services that monitors all this stuff. These were deliberate moves to make it more difficult and almost even impossible. If you remember back in 2018, a lot of companies never got their audits done. A couple who never ended up trading again because the controls were not in place. Now that's all getting a lot easier now. Custodians such as Gemini, Coinbase, BitGo are all developing processes to satisfy the audit requirements and the regulatory requirements. But there's still an ongoing process there to meet that and make it simplified.
Agreed. And I think, even valuation metrics are sometimes difficult to come by with non-traditional kind of companies. I think, mining is to one side of that. But, how do you value the yields, the DeFi, portfolio of digital assets, et cetera?
I could probably chime in a bit too on a couple of the points because I've been through these audits and the basic, and as an auditor, I think it's ridiculous because they're bringing in non-audit people and because they don't understand the blockchain. They don't understand the technology behind the blockchain. So if you have an investment, even in a token, and we have a substantial one based on a decentralized chat that's been in the works for 3 years by some seriously capable Silicon Valley people. And every year we've gone through the same thing where because it was built on the Ethereum protocol, that the auditors felt they had to audit the blockchain of Ethereum as it related to this particular, company. And needless to say, my audit bill was over the roof, and it basically prohibited me, it slowed me down from investing directly in the sector. So I almost had to find vehicles that were indirect so that I could get the exposure that I wanted. In addition, the banks don't want crypto clients. And I've seen many companies that basically open up bank accounts describing the nature of their business as different than what it is, just so that they can transact because, everything is just frowned upon because obviously there's the big picture of what this will mean to banks. And they see the writing on the wall because I know for a fact that they're all doing massive research and investing in the blockchain space. And they know it's coming for down the road, but they are trying to push it back as long as possible so that they don't, get slapped on the wrist by some higher authority that then, puts them at risk. So, yes, Canada is probably one of the better locales in terms of getting in this business. And there are firms, that do audit this, but they're very few. They're not the big guys. And it's a major pushback, just as decentralization is to centralization.
Here's an interesting story. So when I was at Hut 8, we had just completed our raise. I was there as a CEO. We had about $77 million at the bank with RBC. And RBC had me do this presentation to people to explain what Bitcoin mining was. And I thought it went pretty well. And then 3 days later, I got a thing, we're shutting down your account. They wouldn't even let us wire money to our vendors to do our payables. And the reason why is they said, unless we were to conduct anti-money laundering, the AML and KYC, know your client, on every single transaction in the blockchain that we were validating, that they couldn't accept our business and we had to leave, and they shut us down. And you know, the analogy I always make to them, that would be like going to the electrical utility that supplies electricity or water to your house and saying, oh, if somebody used electricity to do something nefarious, then you know the utility is liable. I mean, it was absolutely absurd. And you know, to my knowledge, these days, RBC still doesn't take crypto clients.
Well, that's one of the ones I had experience with also negatively, the RBC.
I will tell you that we actually we bank with RBC, but and when we looked at the opportunity in the blockchain space, our goal was to look at how to create a utility. I like to think of something that was once said to me, you know, Homer Simpson looks for donuts and we look for holes. So what was missing? We decided to look at the blockchain and create a solution that was utility based rather than fundamentally dealing with the crypto space. So that gave us a differentiation that put us inside the blockchain space, but not in the crypto space. So that was very important for us. Additionally, this is our third public company in Canada and our fourth overall. And I have to, you know, kind of send out kudos to the Canadian Securities Exchange, the CSE. They are very great to work with. I've worked with other exchanges in Canada, and we really like the people at the CSE. And I think what makes Canadians unique is that we are speculators. And I don't want to use that in the negative context, but we look at new ideas. We've always looked at mining. We've looked at the promise of mining, the promise of opportunity. And as Canadians, we do rally around a good story, a good opportunity, and look at good management and focus on what the growth opportunities are for a return. So I think Canadians are primed to be great blockchain investors.
Awesome. Thanks, David. So I want to take a little bit of a shift here. I'm curious to know what your guys' opinion is on the upcoming Coinbase IPO. So there's obviously a lot of talk about it. Some of the multiples they're seeing right now pre-IPO are pretty insane. What are your guys' perspectives on the upcoming IPO and how you think that'll impact both Bitcoin and the industry as a whole as it pertains to public markets and new issuances?
Well, I'm going to start there. I think anything that promotes the industry is got value for everyone else. I mean, the old adage that a rising tide raises all boats equally. So I think what the market is perceiving of Coinbase and several other opportunities that are out there, the numbers, even in what we're seeing with digital identity, is the numbers are becoming quite large. And so everybody's getting attention. So I'm quite pleased to see that. And I think it'll continue to grow. Will it have an impact on Bitcoin and other opportunities? I think anything like NFTs, anything that raises awareness of the industry is going to promote opportunity and value.
Awesome. And I guess I'm just curious for you to expand on that. NFTs is, also very quickly emerging subsector of the digital asset ecosystem right now. You guys are positioning yourselves for artist management and to capitalize on that. How do you, I guess, how do you look at the industry? Do you see this as a bubble? Do you see it continuing to grow? Would love to hear your perspectives.
Well, it's really an amazing situation. Sheldon is an investor in our company, and by virtue of that, he's involved in Oasis. I'm a comic book collector, so I'm not an art collector. I'm a different type of art collector. I'm a comic book collector and have been for over 50 years. So I think it's important to understand a collector's mentality, but also understand that that the generations below us, especially millennials and Gen Zs, a lot of people are not into physical product, but experiential and collectibles that might be digital. So we're opening up an entire new market that will drive adoption to digital elements, digital currencies, cryptocurrencies. So I think NFTs are a gateway to all of that. And you know, we think that NFTs represent an opportunity for artists to tell their story in a different way, whether it's experiential or creating collectibles of things that have never been seen. There is so much content that we like to say in the entertainment industry is already in the can. It's already done, but will never be seen. I mean, linear programming is 168 hours worth of linear programming a week per television channel. Netflix and Disney Plus and Apple TV have all changed that by doing on demand. So I think what we're doing is you're creating a brand new way for users and new users to consume, for lack of anything better, cryptocurrency through NFTs.
Awesome, thanks. So quick question for Sheldon. Considering you mentioned he was an investor into your company, Sheldon, as a VC, from a venture capital perspective, maybe more of like a macro approach, what are you seeing in the blockchain industry that's exciting you from that lens?
Well, it all comes down to Bitcoin, which I call the brand. I don't think it's necessarily the best currency in the world. It's an exquisite blockchain. It's not scalable. It's got all the traditional discussions around Bitcoin. But what it's done is and also as a historically big investor in the mining space and gold, I invested because I wanted to protect myself against the debt that countries had in their currencies. That was the primary reason. Inflation wasn't always it. And so Bitcoin is now taking on a bit of that role. So it's actually the credibility, and there are central banks that have bought Bitcoin, not so publicly. So this is all just giving, as David was saying, about Coinbase and so forth, just more credibility around things blockchain related and underpinning. Underpinning is what blockchain is. So there is so much going on. I happen to have this affinity right now, even though I have invested deeply in some miners, because I believe there's still a window here to do it economically. Although there will be the power issue and so forth, and that's going to shake out. But this whole area of non-fungible tokens, to me, is just absolutely the tip of the iceberg. And as an art collector and watching the people go a bit parabolic, I mean, I don't know, I think it kind of passed the point of reasonableness compared to where I think the value proposition should have been. But it's attracting attention, it's attracting capital. CNBC, which most people watched at some point, has a Bitcoin quote at the bottom right-hand corner and can't stop talking about it. And then every week that goes by and there's another endorsement of Bitcoin just underpins everything crypto and blockchain related, as David's saying. And Coinbase, US based is massive endorsement because, we went through a period of time after I originally got involved, 2017, of really what is the SEC going to allow and not allow. And they took down some pretty significant companies, and people were being charged criminally. I mean, this really was a bugaboo and really scared a lot of people away from the space. It went into a crash, nosedive. But behind the scenes, tremendous amount of money was still being invested, underpinning new types of blockchains, new protocols. And so I'm not going to limit it to my own particular interest in the space, because anything blockchain related, I am interested in looking at. But I like to see the real world applications. And I know, and having kids, they don't care about holding a gold coin in their hand. But man, anything digitally related. And I go back to that game Farmville that started 10 years ago or so, where I couldn't understand how somebody on a computer would pay $1 for a cow or whatever it was, when it's like, wait, this is just this is a JPEG NFT created, well, not NFT then, but just an item that was ridiculous. But that is the mentality today. And, going back to money transfers and so forth, the physicality is being taken out of the equation. It's all digital. COVID has, just exacerbated the digital revolution. It just accelerated what was already in play. So I'm extremely excited. It's, reason why I thought maybe I could contribute a few words to this conference, because that is a focus that takes precedent over looking at some more traditional and legacy businesses, albeit how great their potential may be.
Thank you so much. And, I really appreciate the enthusiasm. I'm sure that most of the panelists here will agree. I personally am an avid investor into a variety of different blockchain projects, continue to reinvest a lot of my proceeds back into the industry, into growth projects, into infrastructure projects. I'm working now on my own NFT platform called Rare Store, which is being incubated through GDA Capital right now, which is very exciting to us. And, I think the NFTs are really, it was difficult to imagine back then, the need for skins or JPEGs or, these things you could purchase online. But for the digital, the digital world, the digital economy, it also represents kind of, a statement of ownership. These are things that, just like fashion, people buy a nice belt so they can be seen with it publicly. This is representative of who you are, what your interests are, your support, and you can showcase really that, what you own in the digital world, which will continue to see expansion into the metaverse, into digital art galleries, and as part of your identity. So last question, we have about 1.5 more minutes here. Just curious to what you guys think, very quickly, using a 9-inning baseball analogy as kind of the life cycle of the cryptocurrency market. Where do you guys think we are in terms of innings, and maybe 10 seconds on why? Start with Andrew.
Yeah, I think that analogy would apply differently to different parts of the sector. So I think you're in the early innings of things like NFTs and DeFi. I think you are in the final innings for proof of work currencies, except for Bitcoin. But I do think there's considerable risk. And when I look at the future, and back to the question before, what I think is most exciting here is the type of stuff that we're doing at tokens.com, which is supporting NFTs and DeFi. And so that's kind of my 2 cents. Is I think early for the stuff that's proof of stake based, DeFi, NFT, and later stage in some of the other things.
Thanks.
Well, I'll comment here, Zach. Having worked with the New York Yankees, I think that's a great analogy. I think we're just warming up when it comes to our area of focus, digital identity. There's 5 billion people on the planet, and only a few have full digital identity. So the opportunity is 100% of the addressable market, and to create a utility for digital identity is within our purview. So I think we haven't even hit the batter's box yet.
Awesome. Sheldon?
Yeah, I'll just say we're in the dinosaur period. As much as we think we've come a certain distance, and it took a long time since Satoshi, created this post the market crash. I believe that innings are probably no longer the definitive, time horizons. I mean, how long can a game go for, and how long can an inning last? So I just think it's obviously things accelerate, but it's very early days.
I like all the perspectives, and I think that a mix of all of them is that certain things are being developed, but we don't really know how the game of baseball is going to evolve over time here, what new sectors are going to emerge, new disruptive technologies. So with that, guys, I want to say thanks for joining this afternoon. I really appreciate the insights, and it was great chatting with all of you. So thank you.
Thanks for having us.
Much. Take care.
Thanks, Zach.
Thanks. Bye for now.
Great.